guys, we're back again with another video, and in today's video I'm going to be showing you guys two separate trades that I took. They're both going to be trade breakdowns, and it is going to be a display of a step-by-step approach as to how I utilized this exact strategy that has gotten me to the point of profitability today. And this exact strategy with these steps that I align have not just helped myself, but they've also helped hundreds of other traders that show me testimonials on a daily basis that I'll just drop right here. Now, let's just hop right into the video so that you guys can have a clear understanding of how simple this approach could be that truly could take you to that point of profitability that you're seeking. So let's get right into it. All right, hopping right into it. So, like always, we have our blank charts on the NASDAQ on the left and the S&P 500 on the right. This is a 4-hour chart that I want you to note, and what we're looking for. We're looking to frame trades off of internal range liquidity pools. And once price gets into those internal range liquidity pools, we're looking for SMT divergence between the correlated assets. So before I show my annotations on the next slide, I want you to focus on price on the sell side of the curve when we're moving on to the buy side of the curve on both charts. Note any internal range liquidity pools, fair value gaps that you see on either side being tagged that have a cracking correlation between the two pairs. So pause the video because I'm going to show you my annotations now. So if you got that right, we have a small 4-hour bearish fair value gap resting here on the NASDAQ that was tagged, and a failure to do so on the corresponding fair value gap on the S&P 500. So what is that indicating for me? It's indicating weakness on the S&P 500 compared to strength on the NASDAQ. So now I see we have two steps knocked off on our checklist. Step 1, price reaches an internal range liquidity pool. Step 2, price has SMT divergence inside of the internal range liquidity pool. So now that we have those two steps marked off, this is when you can drop to an aligned time frame to look for a trade execution. And an aligned time frame from a 4-hour key level would be framing a M15 market maker model off of that 4-hour internal range liquidity pool. So what we'll do next is we'll go to the aligned time frame, the M15, and monitor price as we created the tag of the internal range and the SMT divergence on the 4-hour chart. So let's do that now. So here is the M15 chart, and we indicated already that we have weakness on the S&P 500 and strength on the NASDAQ. So if I'm going to look for a pair to take a trade off of, I want to be looking to shorting the weaker asset, not the stronger one. And if you already know this, the next steps that we look for an execution is a change in state of delivery on the correlated asset that creates the SMT lower. So the S&P 500 would be our priority. Now look very closely as to what happens when we make that SMT on our 4-hour chart. What is the reaction on our M15? We're looking for a closure below the open of the candle that created the higher time frame SMT. So mark up your charts before I show my annotations on this next slide. Now, if you got that proper, if you could see this candle resting right here, what does that candle do? This candle runs a short-term high, but it also creates the SMT divergence on the 4-hour chart with the NASDAQ. And then the next candle following that closes below the open of that candle that creates the higher time frame SMT and runs a short-term high. So we ran liquidity and recreated our 4-hour SMT. And now we have a change in state of delivery on the M15. So that is now step 1, step 2, and step 3 marked up. So all we need to do next is look for the trade to play out. So I'm looking to short the S&P 500 off of that order block that created the SMT and our change in state of delivery. So what we'll do next is here. I'm prioritizing the S&P because it is the weaker pair, and all I need to do is place a sell limit at the open of the candle that ran liquidity, created the SMT, and our change in state of delivery. This is a high probability bearish order block. And I don't need to look for a home run on this trade. all I'm trying to do is hit singles. So I just want to get a 1 to 2 risk to reward, and that is what I'm coming to get in these markets. I want to just take what I can and get out. I'm looking for bits and pieces. 1 to 2, done. Or you can take the trade, go 1 to 2, try and take 80% of the position off at the 1 to 2, stop loss break even, leave 20% to the external range targets, whatever you would like. But personally, what works best to really make those baby steps and have the snowball rolling, just shoot for a 1 to 2 low hanging fruit objective point. Now, all we need to do is execute off of that order block right there. That's our tag. We're in the trade, we're in short, stop loss at the high of the order block, take profit 1 to 2. Now let's see how it plays out. Short, simple, and effective trade that almost has slim to no drawdown. Notice how sensitive that candle is because it sweeps liquidity and it creates our higher time frame SMT. This is building a narrative, and this is simple steps that are very effective that provide within the marketplace on a fractal standpoint, week in, week out, day in, and day out. This is so effective. So this was a 4-hour to an M15 market maker sell model. Now the next trade that I actually took was in the same exact day because this was in the AM session. The next trade that I took was in the PM session, which starts at 1 p.m. Eastern Standard Time. So let's get into that. Right now, this is an M15 chart on the NASDAQ, the S&P 500, and the Dow Jones on the right. Do the same thing that I said and mark up your charts accordingly in regards to internal range liquidity, SMT divergence, all of the steps that I labeled in the previous trade. Do the same thing here and see what you can pick up. Now, if you picked up what I was putting down on the previous trade, you would have gotten this correct. So the NASDAQ on the left, we are inside of an internal range liquidity pool on the 15-minute chart. Same thing with the S&P 500. On the Dow Jones, we actually swept a low compared to the higher lows inside of these internal range liquidity pools. So what does that label for us? Step 1, internal range liquidity pool tag. Step 2, SMT divergence inside of the internal range liquidity pool. We're on an M15 chart, so now we can drop to the aligned time frame, which is the 1 minute. And all I'm doing on the 1 minute chart is framing a market maker model based off of our M15 key level. And if you look even closer here, inside of this internal range liquidity pool, note this low here and this low here. Note this low here and this low here. Lower, higher. I am going to prioritize the NASDAQ compared to this being the stronger pair out of all three. So now let's go to the M1 and watch how price traded on the M1 inside of this M15 gap. So this is the M1 chart inside of that M15 bullish fair value gap. What is happening in here? And compare how the first trade was on the S&P 500 and what we were looking for. We were looking for a change in state of delivery, and we were also seeing a run on a short-term high. So if I'm bullish, I'm going to want to run on a short-term low that also creates our higher time frame SMT. And our higher time frame SMT was the M15, the higher low on the NASDAQ compared to the YM. But if you look here now, what does this candle, this singular candle, do right here? It creates the SMT divergence on the 15-minute, and it runs a short-term low. Not this candle, not this candle, not this candle. This singular candle right here runs liquidity and creates higher time frame SMT. Labels as a high probability bullish order block, potentially if it confirms and we close above the opening price of it. Next candle closes above the opening price of that down close. I now have a confirmation of a bullish order block and a change in state of delivery. All I need to do here is place an order long at the tag of that opening price. this is a sensitive area because it runs liquidity and creates higher time frame SMT inside of a higher time frame key level, our aligned time frame, the M15. So we're going to wait now, looking for a 1 to 2 risk to reward. That's it. Price comes in, tags us right at that body. And note how sensitive this is. We come into it, we react, and price then runs directly to a 1 to 2 risk to reward. We take small singles from the marketplace and we fractalize a model. This is exactly like the model I used to print and play out on my swing trades on the hourly and the 4-hour, but it is now fractalized because price is fractal and everything that plays on the higher time frames plays on the lower time frames. And all you need is 2 aligned time frames. You could use a monthly key level to a daily. You could use a weekly to a 4-hour. You could use a daily to a 1-hour. You could use a 4-hour to an M15. You can use an hourly to an M5, and you can use an M15 to an M1. It's the same thing over and over and over again. You need those 2 steps, the 2 steps, internal range liquidity pool tag, SMT divergence inside of the internal range liquidity pool. And then you drop to your aligned time frame and you look for this exact setup, this here. You want to see a run of liquidity, price closing above the down close candle that creates SMT, runs liquidity, change in state of delivery, confirmed. Price comes in, tags that singular candle, target a 1 to 2. That's all you will ever need. Now, I hope you guys took value from this video and you're really understanding how simple it really can be to view and understand these markets and the way that they book price. Now, if you want to learn from me live and watch me trade live, I have a 7-day free trial that I'm going to put in the link in the description of this video, and you will be able to watch me and see it live in action and learn from me and ask any sort of questions you may have in the Discord. So if you are interested, just go down there, click the link, and it'll direct you right to the group. But I hope you guys took something from this video, found value from it. But be easy, guys. Stay safe. Good luck trading. And I will catch you guys next week in the next upload.